because our fixed-ish and our mortgage expenses are so high, so big. Moment we've been waiting for. Well, what does it look like tiny house wise?
Drum roll,
right?
please.
Welcome to Teacup Tiny Homes. Our only goal is to make your life more simple. At Teacup, we build design-savvy little pieces of awesome that are innovative, attainable, and a place to call home. Come along with us and let's go check it out.
Hello, everyone. I am Jen McCarthy, owner of Teacup Tiny Homes, and I'm here today with Shay Steacy of inBalance Financial Planning. And this is a very, very important conversation that we're going to have today. Why? Because we have been talking so much about interest rates, payments, tiny homes, tiny home financials. And of course, with all of that being said, when you talk to the people who are the professionals like Shay, who have been doing financial planning since 2008 for other people, we get some credibility to what we're talking about. Do tiny homes still make sense? Well, we're going to talk about that today. And Shay, why don't you take a little minute and introduce yourself to everyone, and we'll just kind of see where the conversation goes and get going.
Yeah, amazing. So
Awesome.
I'm a tiny home dweller as well as a financial planner. And what I think now is this beautiful thing that I can blend is not only my current living situation and also passion for tiny living and more sustainable living with what I do professionally. So I used to work for the banks, kind of two of the big five in Canada, for over a dozen years. And there was this theme where I felt like I was helping the rich get richer, and I couldn't help people in my generation. That was my big reason for leaving and starting my own independent financial planning firm. And now I realize that this is almost a double down on that when I am talking about tiny home kind of finances, because if someone walked into a bank and talked about this, I don't think that the person across from them would know what to do, right? Not only kind of not know what to do, but have wouldn't be able to help, right? And then wouldn't be able to the bank's not going to make any money from this kind of transaction. And to me, that creates kind of this bias in advice. So a bank will make money if they can issue a mortgage. And if we have a tiny home, that's not happening. And so I don't sell anything, right? I don't sell mortgages or insurance. And that's what it is, right? It's selling things. The bank, they're salespeople. I don't sell insurance or investments. I'm now an advice only financial planner and money coach. I like to say if a professional financial planner and a money coach had a love child, and maybe their aunt was a therapist, that love child. So that's now what I really get to dive into with people is like, what is the stuff that really makes a difference? And it's not the traditional things that people talk about. And so I talk a lot about cash flow and how, how people can kind of get the basics and take control of their money. And then like tiny house financing lays so well on top of that. And that's actually, what we're going to chat about today, like show some actual numbers. But that was one thing that, I really connected me to you was not only are you living and breathing the building side, is you really do care about how choosing a tiny lifestyle can help people in the quality of their lives, right? And some of that does have to do with money.
Yeah, and that's one of the biggest things that drives me. There is just so much pressure right now, and everything from the school system to having double income household that are literally like, if one of the kids gets sick, shocking, which has been happening so much lately, one of the kids gets sick and then all of a sudden you're taking your vacation days to pay for your sick kid that's at home because you're scraping by to make ends meet. Like, it's not a sustainable lifestyle. And I think that's where the tiny home movement is so big. And that's why it speaks so much to my heart, is because I see so many people who are going through the processes of just trying to make ends meet. And that one little glitch in the system, like I mean, you look at women's hormones and just the stress that goes along with it. I think even as moms too, like, we are tapped out, and it all comes down to the stress of the household and especially the finances. So by having you here, and thank you so much, because when you reached out, again, it was something that was going around, talking about interest rates. It's all we hear on the news. It's all we hear basically everywhere we turn. And it's something that when you take it, instead of just hearing people on the news say interest rates are going up, I feel like there's so little actual breakdown that is given to show you how it actually will impact your life. And this is what you've put together is just so perfect to show people the breakdown and to show how to make it work for them. And especially if they're looking to go tiny. So I'm really excited.
Yeah, me too. So I can kind of jump right into sharing a spreadsheet. What I will kind of say is, when you're hearing things like, it's the doom and gloom of interest rates going up, and is there, recession coming, or a recession is here, and everything else. I think some of the financial advice you see is to cut everything back, right? So that you can make up for this other stuff.
Yes.
And cutting back in certain areas can work. But if the biggest kind of line item to someone's budget is housing, and there's only so much that can actually happen around housing. And so if it's the classic advice, cut out the avocado toast or lattes or whatever else.
Cancel your Disney Plus. Wasn't that something that was going around?
Oh, yes. That's really hard on everyone, right?
Yeah.
So what I kind of look at is, and what I do try to help people see, I think I'm coming up on either 2 or 2.5 years that I worked with a couple of people where I did bring up, like, hey, have you ever thought about tiny? I wasn't tiny yet, but that was kind of what their situation was maybe leading to, because buying a house was maybe out of the question. And I didn't tell them that. I showed them what their life would look like if they bought the house that they were looking at. And that would just come down to, what does cash flow look like? So if, I believe that balance is key. It's why my company name is inBalance Financial Planning. I have balance tattooed on my arm. I think it's about that. No one is perfect. It's about trying to find that balance. And so when people are, not making ends meet, or just feeling like, what is off, because things aren't in balance, right? And that, tiny home living and balancing a life, I think, is just they just go together, right?
And you know what, it reminds me of a quote, and the quote is it's actually in a yoga class that I took, and they said, you have to be off balance to train balance. And I love that, because if you, exactly what you're talking about, your clients will come to you, or people come to us because they're off balance. Something needs to change. And maybe whatever provokes them to make a change, whatever provokes them to start working with you, or even call you, or even say, I need help. That's that off balance. And then we, as the professionals who live, breathe, die, sleep, eat tiny homes and all the things, or financials, or whatever that looks like, or design, or just a better life, then we help them gain balance and get back on it. So I love the balancing act, but knowing that continually, like, being off balance and then getting back into balance, they go hand in hand. It's that natural contrast of life. So it's important to know that there are people available to be able to figure this stuff out for you. And like, as a business person, I know financials very well. It is the main thing I have to focus on as a business owner. But so many people don't know how to look at finances and how to run the numbers and how to break it down, or even what are all the things to consider when you're looking at your financials and what your life will look like. So I love, again, this is the difference between hiring a financial planner to work with versus hiring or trying to figure it out on your own, just from what you know, because the ones who are trained in the industry, they know, they have the systems, they put hundreds of people through the system. So that's, again, another reason why it's so important, because people don't necessarily understand what they're doing on their own. And there could be just this little itty bitty thing that changes the entire outcome. So that's why it's important for these numbers that we're talking about today.
Yeah, and actually what I'll say to that is I don't know how many people, I don't know if there's anyone else in Canada who's providing tiny home financial advice, like specifically. But what I will say is the stuff that I think matters, which is like cash flow and kind of getting, maybe just getting processes in place and getting a view on what people's spending is and saving isn't something that I actually see a lot of financial advisors offering, right? They kind of skip to, in my opinion, skip to the end. It's like, okay, well, how much can you invest in whatever else? And it's my answers to people's questions is, well, it always comes down to your cash flow. It just always comes back there. I can't provide you with proper advice if I don't know what things look like. And if people don't know what things look like, then they will continue to be lost out in kind of, cyberland, if they're doing things themselves. So this, when I'm going to share my screen with you, I did create kind of the one main page for us and for this kind of comparison between the two. But this is often what I am talking about with clients. It's actually a copy of the cash flow plan that I look at with clients. And this is how I've helped a lot of people see what their lives can look like given certain scenarios. So awesome. Does it sound good? Just share?
Yeah, let's share away. Let's have a look, dive in. Aaron's like, just show us the numbers.
Stop talking and let me see.
Let me see.
So the first thing that can you see the Zoom controls that I'm moving around?
There,
no, okay.
Is that better?
No, the Zoom controls come up and I just don't know if they're on my screen, but they're out of the way anyway. So,
well, I can see I can't see the Zoom controls.
Okay.
No,
but you can see, so you can see the spreadsheet and everything here. So, what we're going to look at is if you were going to buy a home and if you were going to buy a tiny home. First off, what does that actual transaction, what might that look like? And of course, it can look like anywhere on this scale. So what we tried to start with is talk about okay, well, what would an average home price be? But I think the other thing was, Jen, you had said something like, you're getting people kind of with feedback of well, $250,000, tiny home, is that really affordable anymore? Right?
Yeah.
And I've actually had that from close friends when, we talk about how much I paid for this and everything else. They're like, well, is that really, more cost effective than a traditional home? And my answer is yes, when you look at all the other things. So this is a dynamic spreadsheet, so we can show you different things today. But what we started with is the average. I have little comments so that I can remember, but the 500,000 is an average price across Canada. I think this was the end of 2021, so it is almost a year old. But this is excluding Toronto and excluding Vancouver. So of course this is going to range. If you're out east, this might be lower. If you're in rural area, it might be lower. I get that, but we got to show something, right? So we're going to look at a scenario where someone has maybe $50,000 for a down payment. Again, this may be more than that. It might be less. And then we're going to compare that with a purchase price of a tiny home and sales tax. Now, isn't this fun? Jen, what is the sales tax if someone in Alberta buys a tiny home?
Oh, 5%. That's all. That's it.
Did we change this?
I think no, we could leave it. Yeah. But I mean, in Alberta, exactly. Yeah. Look at the difference that makes. Also, that being said, like, I think our average home price is like $350 or something like that. Well, I don't know where I am. And of course, there's going to be different areas where a tiny home makes more sense. Here in Lethbridge in Southern Alberta, you can still get a small home, a 900 square foot, 100-year-old wartime home for, I don't know, like $285,000 on a giant lot. But basically it's pretty much a tear down and a complete redo. So.
And I think that is a beautiful thing to note as well, because this is the average, this might be the average price, but what is the state of that house?
Yeah.
Right.
Precisely.
We're looking at tiny homes that, at this point are new, right? Like I am in a home that, has kind of the finishings and things of a new build, and it's got lots of light, and I'm not going to have to replace my windows anytime soon, and I think that's important to note as well. Before I get any deeper, I do just want to say, like, disclaimer, tiny living is not for everyone. It may not work for everyone's lifestyle. Maybe someone's numbers look different than this, like their finances work different than this. I think what I don't want people to think is that I'm preaching like this is the only way you have to do things. It's
totally
not. I work with clients all the time who are buying bigger houses because their family is expanding, and like, okay, let's look at that. So just the disclaimer there. So if we come back to this and we're saying, okay, sure, the tiny home purchase price is this and sales tax, let's just look at the total purchase price. So of course, if someone is in Alberta, it's going to be a different rate than here. But if I bought a Teacup Tiny Home, I'm also going to have to get it delivered to me in Ontario. And so there'll be different things. Now, sales tax, I'm not going to just be able to pay the 5% Alberta tax. I will get up to the 13 in different provinces. And that's important to know too. Like, there could be surprises, and I want to show not a worst case scenario, but like a really decent, not trying to hide things and smoke and mirrors.
Absolutely.
Yeah. What this will break down to is to say, okay, well, what is a resulting mortgage payment in this scenario of a house? And what's a resulting loan payment? And these are monthly amounts. So before we get there, what we'll show you here is if you buy a home and you have less than 20% to put down, you're going to have to pay you're going to have mortgage insurance. So CMHC fees, there's going to be a percentage of the amount based on your percentage of down payment. So in this case, I've taken the amount for 10% down, but this is going to vary as well. But it was important for me to add this because sometimes this is just stuff that people aren't aware of or forget about when they're looking at those situations. So even if you had this amount, okay, there's another $14,000 that's going to be added to your mortgage. And the upfront amount, you can't, if there is tax on top of this, which there is in Ontario and a couple of other provinces, you can't add that to the mortgage. So that's another amount, tax on the mortgage insurance, that you have to have in cash upfront. So what I have also shown is in these scenarios, there's different cash that might be needed up front, and that might be legal fees. Like if I kind of scroll down to the inner workings of my spreadsheet, I've got, legal fees in here. Land transfer tax is a big cost, especially like more so Toronto is killer. Like it's double Ontario land transfer tax, but that's something else that people often forget about when they're buying a home, is there will be land transfer tax on that purchase. So coming up with that, then there's, maybe that tax on your CMHC, that mortgage fees. And so what I've done here is just say, okay, well, you need a little bit more upfront. What I didn't do is any maybe moving costs, like things that you might have both ways, just trying to show like the difference in things. And then with a tiny, well, you got to get it to where it needs to go. So maybe this is, I think I just paid shy of $3,000 to come 5 hours. But if this could be, what is that, good or bad?
I think neither. I think hours usually to like Toronto or Ontario from Alberta, where it all depends on kind of fuel too. But I know we've been in that like 6 to 7,000.
Yeah, and this
right?
was actually a last minute. I had to get a third party company, so whatever.
Yeah.
So, maybe this is 3,000, maybe this is 10,000.
Exactly. But that's one of those variable things too, that depending on what's happening there. And also sometimes you can get your towing included in your financing and with an RV loan. So that's another thing too, and ways to kind of get around that, the towing cost too.
Yeah, but what I would say to that is, it's not that you're getting around a towing cost, because you're still going to pay for it and have interest on it. But it may just be, if the challenge up front is maybe having enough cash, like maybe 54,000 is completely out of reach for someone, that would be when we're looking at that. But again, the variables in there are costs with tiny as well, right? Like a site setup, who's going to level your, like, does the delivery or the towing fee include site setup and, everything that you need to get around it. So I'm trying not to ignore the other costs.
Absolutely. It's all important. It's all important to have them included for sure.
So if these were the numbers that we took, right? Of course, another thing to note, kind of, if we're keeping check marks, like this is another point for a traditional home, is you can take out of your RSPs if you are a first-time home buyer. So if you already have some money saved, that could be a way to get more money up front. And there's a new account that has just been started by the government as well for first-time home buyers. That could send me on another tangent of how the government is trying to help for the housing crisis. And I don't think that their ways are made, like, I'm not political by any means, but when I see the things that they're trying to do, it's again trying to help people buy traditional homes again, which is still, it's still challenging. Like, they've created now this first time home buyers account, but that still means you got to put a lot more money in, right? I think the change that needs to happen is allowing for tiny houses to be more easily legal in a lot of different places. So I will step down from my soapbox and continue.
But even on that note too, Shay, like if somebody just wants to live tiny because they don't want a big home, or they don't want, like, they don't want, and this is where I preach a lot, is that, like, you don't want the house to clean. I don't want to spend all of my waking free seconds that I have between soccer practice and dance lessons and trying to get the kids outside to play and running and owning a business, or your 9 to 5 or whatever. I'm sorry, I don't want to spend all of my waking hours cleaning and maintaining and managing a traditional style home. maybe it's better if we go smaller. Maybe it's better for our longevity as like a society, because you will get outside. You won't be spending and wasting your money on filling a larger home with a bunch of crap that you don't need, right? And that's the tangent that I go on. So there we go.
No, like
Back
you
to you.
got
Back to
me,
you.
you got me fired up there, because I absolutely agree. So this is actually an interesting comparison, and people will, when I look at cash flow, or when you're talking to a lot of people who will financial kind of I don't want to say advisors, but people who are talking about finances will say that you need to build in maybe some savings and investing before you kind of get to expenses. Otherwise, your expenses will kind of fill up your free cash flow, and there's nothing left to, or less left to invest or put away. And the common metaphor, I don't think that's the right word, but common comparison is for people is to say, when you have like a bigger house and you got an empty room, like you'll just keep buying things to fill it. It's the same way with, so I think that's a really interesting thing is I can't fit anything
You're
else
full.
in.
Yeah, you just won't buy more stuff because you could be, and I've heard so many people, like my friend Adelina, she's my big tiny house life, right? She has so many videos on this also, and she's like, I just don't buy the stuff. Another one of our clients, Lorraine, talking to her, she said, I used to love going clothes shopping and like going to Sephora. She goes, I just don't, I have no desire to. She said, I signed up for ukulele lessons. How great is that? Because now you're not wasting time, energy, and money energy, because I believe money is simply energy on those things, because you don't have the space. So you have more money, and you'll take that money and then you can invest it. It's this.
Yeah. So that I think will come back in when we're looking at the other things with what excess money will allow you to do. And I think it really is important to show that if there should be some then additional maybe investing for your future. Again, given the situation, we may have, if you've got someone who's selling a home, they're kind of in retirement and then buying tiny, this is a completely different story. But if you're someone kind of starting out, it still will be important to put money away for the future. A question that I have all the time is, I don't know how to do that. Right? Where traditional home ownership is like forced savings. Very few people will kind of miss their mortgage payment, or their mortgage payment will be the last thing that they're going to miss. And it is forced savings, right? There's a lot of people who look at their house as their retirement fund, maybe. There are a lot of challenges and setbacks with that. I don't think that's kind of where we'll go today, but when we get to cash flow, it's either, what if your monthly expenses are less, what else do you get to do in your life? So we have a quick summary here of what do these two scenarios, like how do they play out from a monthly housing cost standpoint. So we're going to go beyond, or like this conversation today is going to go beyond just the housing costs, because I want to add a different layer into this. But if we're looking just at housing costs, the costs to run a tiny house are much less than to run a traditional home.
Yes.
Hallelujah. So the first thing is the loan payment versus the mortgage payment are different, right? A loan, so if you're buying a tiny home that seems like it's expensive, right? And the loan is a significant amount, the loan payment, it doesn't feel great, but it is there, okay? And I think I used a 9% interest rate here, somewhere high, which is current what you were saying from the people that you finance with,
Yeah, I
right?
think it was a little bit less. I think we were like 8.6, but on the state side now, they're at 8.9 for financing. Yeah.
Mhm. So here, we've got kind of that number then, and it's a 1584 for a loan payment. This is only over 20 years,
Mm-hmm.
right? Where the mortgage payment, I've got this over 25. All of that, and I won't get too much into the mortgage calculators, but I will show what dollars I use.
Yes.
So a mortgage payment here at roughly current interest rates. And so yes, mortgage rates have been very low, and this mortgage payment would have been lower if we could use a 2.1% interest rate. And mortgage payments or mortgage interest rates will change over the life of a mortgage as the term comes up and people renew. This is with I think it's 5%. The financial planners standards of financial planners. Oh my gosh, this Financial Planners Association of Canada. This is the professional body that I'm part of, and I can't even think of the name because I'm riled up on tiny houses. But they have guidelines that we're to use as certified financial planners, and the long term for mortgage is actually 4.2. So that's not that far off.
Yeah.
So of course, let's get to utilities. Like, I think I'm being generous when I say that house utilities are $400 on a traditional home.
Yeah, definitely. I think that like yes, and I live in a traditional home, working for a home builder since you were 21. Obviously that comes with perks, and I have been able to build full-size homes as I preach. That's why I'm so passionate about not wanting to maintain it all the time. But yeah, no, our gas and electricity bill this past month was $657. So, and that was just for gas and electricity. That didn't include garbage or water or any of that. So,
and again, this can range very broadly.
Totally. Yes.
What I will also add to this is a $500,000 home in some places of the country might be a condo, and condo fees on that will also add another $500, $600, $700 a month to these monthly amounts.
Yeah.
Right. Because condo is again, in a lot of places, like I'm just outside of Ottawa, and you're not going to buy a house for 500. Maybe a very poor quality house or a house that needs a lot of work. So then not the default, but the next choice would be condo. And it's like, okay, the mortgage is still there, but now you've got to add these, these condo fees. Utilities might be lower and things, but it's just something that's not here. Again, too, if you have a home, this is where you can maybe tell me when you're talking to people, do they have kind of hesitation because you don't own land with a tiny house?
Yeah, I mean, it is. There's a lot of people, and I question like how much they have researched. Like, you can really tell when you're talking, especially on social media, who you're talking to, where the awareness level is, I guess, is like how obsessed they are with the tiny home movement versus not. And everyone has their different reasons for doing things or wanting to be a part of the movement. And tiny homes can look like a tiny home on a foundation. It can look like a tiny home on wheels. Tiny homes come in many different shapes and sizes, of course, just like every different scenario that we're talking about right here. But yeah, not having it attached to the land, but that is like, if you're renting, you're basically just paying someone else's mortgage off anyway. So, at least with something that you own and you personally own, you have something that you're paying into that then becomes something that is yours. So
yeah, and when you own the property, right, and you own like a traditional home, you got property tax to pay. A property tax is not doing anything to kind of get you ahead so far as paying down your mortgage or having more equity. So this is something that I'll often show to people if it is kind of a renting versus buying scenario as well.
Yeah.
So yeah, if you have a tiny home, depending on your situation, you may very well have a parking space rental. I am paying $678 after tax, and I have water, hydro, internet, parking spot, snow removal, like I've got a beautiful
Awesome.
view, right? Like I got a lot of things. So you can this is going to vary widely, and this is still very new
Yes.
right? Like what you're actually going to pay. So yes, there is going to be a rental, which is in some people's minds like a throwaway cost, but there are throwaway costs on a mortgage as well, or on a traditional.
Yeah, so you're taking that difference, your parking space versus your property taxes per month, like you're really only looking at a difference of 300 and what? If I do my math in my head, like you can see it right there, $33. Did I do that right?
Well, of these numbers, right? And they of course could be for property tax. I've taken 1% of the purchase price, which is kind of a typical default. And parking space, who knows, because things are so widely varied. Like maybe you're on property that you're not even paying a parking space rental because you're doing work around the property. Like there's so many exciting things to take away there. So another difference here would be kind of an annual maintenance amount. So what I recommend to people, and kind of good financial planning advice, is to account for about 1% of the value of a home in annual maintenance each year. And maybe so on a $500,000 house, it's $5,000. Maybe that's not what you're paying every year, but when you need new windows, or if you need a new garage door, or if you need a tree taken down. Why is it so expensive to take trees down? I did it in that. So I was like $2,000.
Yeah.
Okay. So this is just, as a good practice, starting to kind of account for that in your monthly planning would be something that I look at.
Fertilizer, lawn care, like there's so many expenses, honestly. Like you need a new garden hose or whatever, you leave your hose attached and it explodes, because that's what happens when you own a home. You need to do paint touch-ups every now and again. Like it's So,
don't get me wrong, tiny homes have maintenance as well, right? Like you come home to things. I've had things already, like my dog knocked over something, because you can't put things kind of off to the side, because there's no off to a side tiny. So I had a gate here and he knocked it over, and now my brand new like mirror here is broken on the bottom. Stuff's gonna happen in a tiny house too, right? But probably a lot less. And if it's newer, right, than a kind of older $500,000 home, then the cost would be lower as well. So just some things that we're looking at. So the first thing that we'll say on here, not the first thing we're going to say on this sheet, we've been talking about it for a very long time, is monthly housing costs, kind of home versus tiny home, are very different. That's almost am I going to do my math? That's almost $1,500 a month difference just there. And that's assuming down payments are the same and everything else. My situation, I was fortunate enough to get an offer on my traditional home. And so I actually was able to buy this outright with the proceeds of the sale of my home once the mortgage was paid off and everything else. So if we actually put in like a $0 loan payment, which is a scenario that people might have.
Yeah. Totally. That's big.
And I'm not living in a basement apartment. I have beautiful windows, like I have lots of space. Like that, to me, that was huge. So again, this isn't comparing apples to apples. My mortgage wasn't $500,000, but I think it's important for people to see, like, sure, we're just showing if you have to take a loan out for it. right?
Definitely. Hey, do you know, like, is there an average or like something that says how much the average household like spends an extra like spending in a month? Is there a number? Like when I think about it, like the random, I know I spend almost $100 more if I actually go to the grocery store and shop versus if I order my groceries online. And like with my family of 4 and my growing kids, yeah, they will eat a lot of food. But just kind of that wasteful spending, is there an amount like 200, 500?
Like, so if you're comparing kind of traditional home to tiny.
No, I just think like just generally in a traditional home, like on a family of 4 or even one person or something.
Stats of like the dollar amount that the average family has in food waste, right? And just something like that. And I know I've seen the stat. I don't know that I remember it.
Okay.
It was, I'm thinking 600 or 4,000. Like it was something silly. Like I can't remember it at all.
And I just threw that one at you with no preparation, hey, because that just popped in my head. But
would you give me a heads up? So, but I also think so that certainly is something. What I am realizing as I'm in this home is that because there is less space to put things, and maybe that's food, right?
Yeah. Yeah.
Also, my situation right now, I actually have a water tank that I'm filling up. Does it ever make me more conscious of water? Right?
Oh yeah.
Like actual change in my lifestyle is like, again, goes to reducing a lot of things. And so for me, tiny living is sustainable not only financially but environmentally as well. And so
right. Yeah.
But
like the word, yeah, like intentional. You just, and that's what this movement is all about, is you are almost like forcing yourself to be more intentional than maybe you ever even thought you would be. You're forcing new habits for yourself to create more energy, money, better environment, sustainability. You're forcing yourself to do that when you take the leap to go tiny.
Yeah. Listen, I couldn't say enough good things about it.
Yeah, I mean, we're not here to preach the tiny home movement here or anything, but
are into watching it, they're already kind of converted. So
yeah, if you're still here, hi. No, this is such good stuff. Okay. I just wonder, one question I had though too is if like, what would it look like with a $20,000 down payment or something
on a tiny home?
Yeah.
So here is another thing. So you can see the numbers have changed on screen, and it's still, $1,200 a month less expensive. What I like to also compare that to is if you do only have a small amount of money up front, a home may just be out of reach because of the logistics of kind of, you need I've been out of the mortgage, like kind of not the mortgage game because I never really was in it, but mortgage rules have changed so much, especially after the 2008 mortgage or kind of financial crisis. But you used to be able to get like zero down on a mortgage or on a home because they could do, but they're really kind of pulling back on those things. So if you only had 20,000, does this one calculate my kind of the percentage? But like that actually doesn't work.
Yeah,
right?
you can't do it. You would not get approved. Yeah. Isn't it anything over 500,000 you have to have 20% down?
Over $1 million, you have to have 20%
over
down.
$1 million. Okay. For some reason I thought it was 5. Or maybe it was a while ago. I'm not sure. Again, it's been 7 years since I was in the home building industry. I mean, traditional home.
Again, like you used to be able to get 30-year and then you can't, but maybe you still can't have a certain amount down. Like I will kind of admit I'm out of that as well.
Yeah.
Not knowing that is like if your initial funds to put down are limited, just the very fact that it takes a lot more money to buy a home may make a home scenario out of reach. And so I don't want people to feel discouraged about that or feel like they're failing. Like there's a whole lot of other things that are failing these people, right? Who may feel that way, and it's not them, right? Yeah. So there are systemic things that are making this very challenging. And so thank you for kind of getting me to show kind of a $20,000 amount, because that is a lot of money for a lot of people.
A lot of money. Yeah.
Yeah. And if that's all that you have, like, again, you can't, this one didn't change.
Oh
no. You know why? This right here, this one right here, and we'll change it, right? So even just there, like there can be very much like different needs up front. And so that's all really important to know as well.
Yeah.
So I'll just quickly glaze over the mortgage calculator and everything, but we do have the mortgage is 5%. It is payable over 25 years. 300 mortgage payments if it's monthly. How does that feel?
Yeah. Feels like teens.
Total payments over 25 years if the mortgage rate stayed at 5. So, it may very well not, let's put it at that kind of a guideline number.
Yeah.
Nope, can't do it. Sorry.
Just kidding. We're going to leave it at 5 today just because.
Right. So total interest here being $368,000, right? Like your $500,000 home cost a lot.
Yeah.
Don't get me wrong. When we show the what or have we left this at? Let's change this back. So in this is less, right? Because we put more down payment. But I wanted to show the loan calculator. So is there a lot of interest payment over this loan as well? Yes, right? So the rate is higher. We have used 9%. And this is something that I do want to share is, if a rate is high, like 9% sounds awful. It makes me want to, throw up my lunch.
But again, like how many people are paying 19% on their credit card because they can't pay off their credit card every month because they're trying to pay for their freaking rent? Like there's so many things to come back to with this. Is that because you're out shopping using your credit card, buying a bunch of shit that you don't need? Yes, I said shit in my because it's important. You're paying 19% on your credit card. How many of you have clear your credit card every month? I clear my credit card every month. I was taught that. I was taught how to do that, but I know that is not the norm in society today. So, and rant again, continue on.
So you clearly there's like the passion meter, like me, like starts to go, right? Like we both. And I think that's really important to see too, is that people who live and breathe this, right? You as a builder and, coming from a traditional industry, and me as a planner who now live and breathe this, like we're sitting going like, come over to our side, like, cause it's fun over here. Right.
Yes.
But what I'll say here is, yes, the percent might be higher, but if you put a higher percent on not only a lower initial amount, but a fewer years, then the dollar amount changes as well, right? So that is something to share as well. Now, you had a beautiful email/blog that came out from Teacup about, okay, so if this is the scenario, what can you do to pay this down, right? And so that would be, okay, you putting additional payments down, whether that's kind of regularly or lump sum, that sort of thing, that can all bring this dollar amount down. It can't change the rate, but it can bring the dollar amount down. So that's you can do that on a mortgage as well, right? Just to a certain extent, without fees, but that, like, yes, there is cost to this as well.
Yeah,
So
and I think that that's key too, because I don't know, maybe everyone does know about paying your principal versus paying your interest. And when you make your monthly payments, a large majority, as you're showing below, goes to your interest payment instead of to your principal loan. But you can call in and put lump sum to your lender, lump sum extra amounts onto your principal. And by putting on the principal, you will be lowering the amount of interest that you pay over time, and you'll be paying that off sooner. And I think that's what you're probably going into. But it's important to remember that just because it says that you're going to pay $204,000 total interest on this loan, and this is what it looks like on paper, like, don't get stuck on that, because things change every single moment, and the only thing that is guaranteed in life is change. So if that means that all of a sudden you have extra cash because you can put it down, you could increase your monthly payment somehow, and you pay it on the principal. This is not, I don't know anyone who actually ever pays this amount, because it's always changing. And that's something to keep in mind. It's there for you to see, but it's never going to happen.
Yeah. And because the balance on like a loan, let's say of this amount, will go down and be like a smaller dollar amount faster, I think that also motivates people to like, okay, it's, it seems manageable now, so let's try to hammer this out. Like, money is filled with emotion, and sometimes the best decision sometimes the best recommendation I make is not the one that makes the most dollars and cents, like makes the most sense. It's the one that there is like kind of maybe changes a behavior, or an example, a client had a interest-free loan from a parent and had credit card debt. Well, you know what? The recommendation was actually pay the parent back because the emotion and feeling was too draining there. Right?
Yes.
There's so much more. So I would say that is like having a mortgage balance of like that still is so high. I think sometimes people end up having the attitude, well, like, what's the point of throwing more money to it? Like, we're just going to have a mortgage forever. And I think very easily like that, or a lot sooner, that would change on a scenario like this to say, oh, hey, let's try to get it under 100,000. Right. And it becomes, a game or like something else to play. So, so I think that's fantastic. So I think here is where, in my mind, the biggest eye opener is for people. So when you go to a bank or mortgage broker, they're going to tell you what you can afford, right? Like the biggest house you can afford. What they don't show you is what your life will look like afterwards. And that is why I always focus on cash flow with clients. What comes in, what goes out, what can you change, what can you control, and then what happens. So I have two scenarios here, and the base scenario in each of these is the same. So what I'm going to show is kind of income that comes in, and then I call committed expenses, like what are predictable, that don't really fluctuate a lot month to month and aren't emotional, right? So less easy to overspend on a month to month basis. Don't get me wrong, these could be one of the bigger percentages that you could change on the, on kind of the bottom line, but they typically don't fluctuate a lot.
Yeah.
I also am going to show that there's this kind of spendable amount. So what can you spend monthly or even weekly on all the other things in life that change month to month? Like, who has the same amount of entertainment spending or grocery spending or eating out or gifts or, clothing every month? You don't. Yeah. So we're going to show kind of this, base amount, and I won't focus too much on cash flow, because like, I'm sure I'll do something else on just more cash flow. But what I wanted to show is, end of the day, after typical expenses that a typical Canadian may have, what does this mean? And this is what I've helped people see, like, okay, the house, it sounds like a good idea, but now that I see what it will mean, doesn't feel good anymore.
Yeah.
Let's say that a household is making 150,000 combined and they're each making 75,000. Of course, this is going to be lower, higher for everyone. But what I've done here is say, what is then kind of coming into a bank account, if we're looking at it on a monthly basis, after tax withheld, CPP and EI, no other deductions like for a pension or healthcare or whatever on your paycheck, just those three. Here's what's actually coming into your bank account, because that's what you get to use, right? And allocate to goals. So this is the summary. Oh no, we gotta fix this. Whoopsie. What this is that 3,900 from our last page, right? Here are your mortgage amounts.
Yep.
So then I also show, okay, well, transportation expenses. Well, a lot of people do have, a vehicle payment. Maybe you don't, and that's great. And we just change it in both scenarios. But typically I do see a payment going out.
Yeah.
So if transportation, is this. Other financial obligations. Do you have children? They are expensive.
Yeah.
So whether that's childcare or extracurricular activities, I have a lot of clients in and around Toronto, and daycare is
insane.
Upwards of $2,000 a month. And then, so there's going to be a cost there if you have pets. Maybe you've also got a life insurance premium to protect everyone. Here's some just different financial obligations people frequently have. And then what if you did want to do a little bit of savings, right? Maybe put a little bit into, and we won't go too much into here. And if anyone from another country is watching this, these acronyms are not going to be familiar. And even if you're Canadian, you still may not know what these are, but I could just have said investment savings,
right?
Retirement savings, and maybe I should change those, and education.
No, leave it. I think it's good. Like the industry, and we talk across the industry, what is it, 401k in the States or something like that, and whatever. So, if you want to know what each of these mean for anyone watching too, then you can just Google it and see how it goes across.
I think this is a Roth IRA. I think this is the 401k, and I think this might be a 401b.
Yeah, I know. I think you're right, but I don't know.
Yeah. So also, can I add some balance to this person's life of doing $3,000 worth of fun stuff a year?
Yeah.
Right? Maybe it's a family vacation, maybe it's weekends away, maybe it's, so I also want to account for balance.
Yes.
Now, here is this spendable amount. This is all of that other stuff that changes month to month. And I haven't gone into all the details, but this could be medical. This is the groceries and clothing and entertainment and gifts and all of that. $2,500 a month is not a lot for a family to feel overly comfortable in what they're spending. It's probably at least accurate. And this is where we're seeing credit cards build up and maybe increased amounts put on credit lines and things like that. So weekly, and I like to think of this weekly because it's easier to put your head around, would be $577, right?
Yeah.
So this, again, we needed to kind of put something in, right? Again, can be very widely.
Yeah.
If this was everything, this is the total of everything.
Yeah.
Okay, so we've got money coming in. We have those kind of fixed-ish or committed expenses. We've got that spendable amount, and I need to change my language here, but there's not a lot of breathing room.
Yeah, there's none, really.
So if someone wants to go part-time, if someone wants to, someone wants to go on a mat leave, extended mat leave.
Yeah. If somebody gets sick. If a kid gets sick and all of a sudden you have to stay home with your kid for 4 days out of the week and you don't get paid for those 4 days because you have to take time off and you're hourly, which we see this all the time, there's no wiggle room. There's not.
So that's kind of because our fixed dish and our mortgage expenses are so high, so big. Moment we've been waiting for. Well, what does it look like tiny house wise?
Drum roll,
right?
please. Yeah.
Everything else is the same.
Boom.
Right?
Yeah.
Transportation, financial obligations. The difference here is this housing expense. Okay. We still have savings. We still have spendable.
Yeah. Wow.
That's breathing room.
Yeah.
Right. That is, now this where I referred to this earlier of like, okay, but we still do need to have maybe some forced savings. So this becomes a place where now you can put $500 a month into an investment, and that can now grow for 20, 25 years, just like kind of the same length of the mortgage. But this to me is
yeah, absolutely.
And I will be honest, this was my situation. Everything working like, or, I had to build my business more, and I had to like worry, and I had to stress about like getting new clients and just like, I got to have, $10,000 month, $15,000 months, like all of this. And when I came here, that changed. And as a business owner / like I'm self-employed, right? I work for myself. The difference in how I approach my business now isn't from a place of desperation. It's from a place of balance.
Yeah.
I can't sit back and do nothing, but now I have, this flexibility. And that is huge for me. And I hope for a lot of people as well.
Yes.
So, we can get a little bit farther, kind of show how that investment can grow over time. I'm not going to get there. I think that's, maybe another, for another day. But this is kind of what the crux of today was. So talk to me.
Well, what I love about all of this is that it shows the reality of the situation. And I actually, as passionate as I am about tiny homes and the ins and out, I also actually love finances and money and managing money and the automation of it all and the things that you can do.
Do not come for my job. Just kidding.
Like, thank you. So now, Teacup Tiny, let's see, financing. No, I'm just kidding. No. I don't want to do that. I like, it all comes back to having that freedom. And when we see that end dollar amount, what do you do with extra money? Well, I believe that money is energy. And I say this all the time. And it's exactly like when you're saying you pay back mom and dad, because that amount of energy around that money is so stressful that it will just kind of create more of this stressful feeling for finances and money. And there is so much bad energy around money, usually because people don't understand it. And if we take the time to sit down and just like create a few new rules for ourselves based off of great information that someone like yourself can put together for people, just with this spreadsheet alone, you can see the picture so much more clearly. Because what I know to be true is that we create these situations in our head about what we think it is. And then that situation becomes worse. And when the situation becomes worse in our head than maybe it actually is in reality, it festers and it grows and it becomes fear and it becomes illnesses and it becomes a broken down immune system and it becomes just everything gets really hard. So
it can become it's like, what is the number? Like, I think one of the number one reasons for divorce is money, is finances. And so if you can alleviate stress, you can, whether it's just like avoiding the extreme of like separation for couples, but it allows people just to be happier and enjoy the people around them more.
Yes. Yes. It's actually, it's being happier. It's giving yourself permission to have a better life. And, there are so many things that we talked about before too, but I think for the sake of time, maybe we should do this again, actually, and go into some of those other conversations. But even as far as we were talking about inheritance and spending money sooner, or having money to spend because you've reduced your monthly expenses, being able to retire sooner, or enjoy your life more before you have to retire. Like the baby boomers now, I wonder what life expectancy is going to be. Again, those of you who have been watching for a while, my dad passed away this summer. He was 67 years old. He did retire when he was 55. And he had a really, really great amount of time to enjoy that. But are we going to have that? Is that even going to be something for millennials, or even your Gen Xers who are now getting up there in age? What do you want for your life? And I guess that's where the passion lies again. It's just that I am too adamant on having a very good life and helping other people know and understand that they can have a very good life too. And that's where all the tiny home things come in. And that's where proper money management comes in. And that's where reducing the stress and reducing the amount that you have to spend maintaining a home, or doing the crap you just don't want to do. Like, stop doing that. Stop spending your time doing that. Do stuff you want to do instead. So make your life more simple. And I think this is a really, really great way to show people how they can do it.
I'm gonna stop sharing the screen, and I think that's a beautiful way to end. From my perspective, kind of looking in on you and Teacup, is I feel that you genuinely kind of portray this in how you are, how you're presenting yourself, whether it's on social or whether it's in your emails. But I think that takes you to another level. Is it's not just the homes, right? Timing of your life, and when you've made certain financial decisions, you can't compare yourself to other people, right?
Yes,
so
exactly. It's live for you. It's time to live for ourselves and do what we want. Yeah,
find balance.
Exactly. That looks different for everyone. Love it. Okay, well, we will end here. Tell the fine viewers where they can find you and how they can reach you if they want more information.
So my Instagram is at Shay Steacy, so you can maybe see it on the bottom here. My website is inBalance FP, like financial planning.ca. Want to be able to do is help people in an unbiased way, so people can kind of get 75 minutes of my time. I have a money Q&A. Right now, the cost is $349 Canadian, and we can kind of dive into a situation. There are a ton of other ways or kind of engagements that we can do, but I think that's a really good toe in to say Shay, you did this. Can we look at mine a little bit? And I would love to do that. So let's see, find me.
Awesome. Good. And if you guys are watching and you're not sure, send us a message. If you want to find Shay and you just and you can't find her, let us know. We will absolutely connect you. And of course, if you want more information on tiny homes or Teacup Tiny Homes, or who we are and what we do, or you want to take that dive into tiny living and you're ready to go, then of course send us a message. teacuptinyhomes.com is the website, and again, our handle on Instagram too is Teacup Tiny Homes. I really hope that you all enjoyed this today, and I think we'll end it there. Thanks for joining, Shay, and we will stop here.